Welcome back to another episode. Today we are going to take a quick look at Affirm Holdings. They just reported earnings yesterday and the stock price is up over 22% as I am recording this episode. So first, right off the bat, I just want to say congratulations to any long-term holders of Affirm. Congratulations on these gains. So on today's episode, what I want to do is first, I want to take a quick look at earnings. It was definitely a very strong earnings, so I want to do a quick review over them. The second thing I want to do is take a quick look at some yellow flags, right? I don't want to say there's any crazy red flags about Affirm at the moment, but there are some yellow flags that investors should keep their eyes on. So if this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and let's get started. So Affirm Holdings, like I mentioned, this is traded under the NASDAQ as ticker AFRM. Right now, pre-market, the stock price is up nearly 22%, sitting at about $112.30. And Affirm, for you guys not familiar, this is mainly known for its buy now, pay later services. So right now we can see from its 52-week high, the 52-week high was around $146.90. 52-week high closing was around $140. Right now the stock price will open up in the 113 levels, and this is a high level that it had during recent IPOs. We can see here in February 2nd, 113 was around the levels. Here in January 19th, it was around $111. So these low teens, mid-teens seems to be a nice area when this company first IPO'd. Right now, with the current raise in price, Affirm currently has a market cap of $30 billion with this 20% growth, about 29.76 at these levels pre-market right now. So on today's episode, this is going to be something very important when I take a quick look at some of the yellow flags. But let's take a quick look at earnings. So first, let's just look at the highlights, right? Accelerated Q4 gross merchandise volume growth. For a company that deals in fintech, this is a very important metric to look at, and this has grown 106% compared to the same time last year. Total revenue grew 71% year over year in both Q4 and for the full year. I think that were some strong numbers. We can see, right, this is definitely a growth stock, and when we take a quick look at valuation, it is priced as a growth stock. They did expand their network. Like, the main reason they're growing at these crazy levels is they nearly doubled their active consumers, and they're also growing their active merchandise by over 400%. That's more than fivefold. And the best thing about their earnings is the full revenue outlook that they gave for the full year of 2022. And this is right now, they just ended their fourth quarter of 2021. So this is going to be for the brand new year. They expect GMV growth of at least 50%, and most of this growth is not even accounting for any benefits that they might have from Amazon's partnership. So earlier in August, they did announce Amazon partnership. We are going to take a quick look at that. But these guidance is not expected to have anything to do with that partnership. So investors are even more excited about that. So now let's take a closer look at some of their highlights for the quarter and for the full year. But first, let's take a quick look at today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through The Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to The Motley Fool, and now onto today's video. So if we take a look at the fourth quarter and full year highlights, transactions per active customers has increased about 8% to approximately 2.3 as of June 30th of 2021. This is when their quarter ended, right? So this shows that, hey, there is a form of stickiness in their business. A customer uses their platform their products at least twice. So that's actually pretty impressive. It shows that people keep coming in. And honestly, if I feel I don't use much buy now, pay later services. But But if I was to use it once and I liked it, I would normally stay with that business. So the more customers they're grabbing, the more likely that those customers are going to keep coming back. For the full year, like I mentioned, they saw a 71% increase in revenue. Revenue was about $870 million for the year. And this was driven primarily by the growth in network revenue and interest income related growth to their GMV. So again, just an increase in the overall market. This increase of their overall market just increases their gross merchandise volume that they're seeing right now. I do want to say some of the yellow flags right now is, even though this company is growing at crazy levels, they are at an operating loss right now. This is a company not making money at the moment. Net loss was $430 million. Most of the net loss comes from stuff like stock-based compensation following the IPO and some other types of expenses. But at the moment, one of the yellow flags is this company is not making money at the moment. Now let's take a quick look at some of the recent business highlights. I think this is where investors are super excited about, right? So in June 2021, this company announced an exclusive partnership with Shopify by making Shop Payment Installment exclusively powered by Affirm. And this is a big move, right? Shopify, I believe, is the number 2 highest e-commerce used here in United States. So this is a great move, especially since it's an exclusive deal. In 2020, in August of 2021, the company announced, this one is a non-exclusive partnership with Amazon to offer Affirm's flexible payment solutions to consumers who shop on Amazon in the United States. And this is for purchases over $50. There are tons and tons of purchases of over $50 in Amazon. So this is definitely going to bring more customers. The one thing I do want to mention is this right now is not an exclusive deal. Amazon has other solutions for buy now, pay later services. I know Amazon has their own credit card that if you spend over $150, you have 0 interest for the next 6 months. So there are other services out there in Amazon's platform. But regardless, for those people that have used Affirm before in some other platform, they're now more likely to use it on Amazon. So these are the two, I want to say, the Shopify deal, the Amazon deals. These are the top 2 giants of e-commerce here in the United States. So it makes perfect sense for investors to be excited. So the company did give a full year guidance for the full year of 2022. And for revenue, they expect somewhere about $1.16 billion to $1.19 billion in revenue. That is a huge growth. The recent investors are super excited about this growth, but more importantly, this guidance does not include potential contributions from the recently announced partnership deal with Amazon. So what does this mean? It means in the upcoming quarters, this guidance is going to be improved after they get more information from this Amazon deal. So investors are super excited about this growth. The second thing is this company has also not included any potential revenue from its forthcoming rollout of Affirm Debit Plus. So again, they are allowing new products. They are announcing new products. So this revenue is not counting for that either. So investors are like, hey, you're not counting for so many new things in your pipeline. So this means your guidance is going to be super strong. So if we take a quick look, the overall revenue this quarter, I want to kind of compare it to what analysts expected. And another reason I believe stock prices are up. So revenue for this quarter was $261 million. And this was up from $153 million a year ago. The street expected somewhere around 224. So overall quarter revenue growth was insane. I do believe the most impressive one was the full year outlook. Like we saw, Affirm expected somewhere between $1.16 billion to $1.19 billion. Street estimated somewhere about $1.16. So right now, Affirm already has guided for at the low end to meet street expectations, but they still haven't even added everything else like the Amazon deal, like their Affirm Debit Plus, the product that they are announcing and that they are working on right now. So again, this company is going to increase their guidance more than 90% sure about it. Obviously, something can happen around the world that can kind of decrease it, but more than likely, this company is going to increase guidance in the upcoming months, in the upcoming quarters. Now, I do want to take a quick look at some of the yellow flags. I do want to say first, one of the biggest yellow flags is this company has a market cap of $29.7 billion. And this determines a lot with current values right now, right? So right now, this company is expected to have about $1 billion in total revenue for the full year of 2022. This gives it a price to sales ratio of over 25, right? So over 25, that might look a bit expensive. Even if this company has a huge increase in total revenue from those other deals, I do believe that price to sales ratio will still be above 20 with the new guidance. And this is forward price to sales ratio. So I believe one of the biggest yellow flags at the moment is valuation. The crazy thing, the reason I put this as a yellow flag is valuation can seem absurd for numerous years, for numerous months, and eventually fundamentals can catch up to it. So the real question is, even though valuation seems high, will this company kind of drop down in price, or will it just kind of sit idle until fundamentals kind of meet where it's at? So that's the first thing, right? That's why it's a yellow flag. It doesn't guarantee that the stock price will go down. The second thing I do want to say is, buy now, pay later is not a new product, right? It's nothing new. There's a lot of competition in here. For example, PayPal on a few days ago just snapped up about a Japanese buy now, pay later service to kind of increase its Asia market shares right now. And right now there was a headline here: as buy now, pay later surges, a third of users fall behind on payments. So titles like that can kind of just show a little bit around the market. Again, these aren't any necessarily red flags, just yellow flags that, hey, as an investor, these are things I should know. I should know that there is a nice amount of competition in the market. I should know that some of the bigger players are out there trying to buy smaller firms to increase their market share. At the same time, Affirm did win a deal with Shopify, an exclusive deal with Shopify, and a non-exclusive deal with Amazon. So there is some reasons to invest in the company. At the moment, this is not a company I am invested in, and I have no intentions of buying this company at the moment, but I just wanted to do a quick recap. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.